Guys, welcome back to the channel, welcome back to a new video. Today it is a Friday, usually it's a little bit more quiet, but the futures in the United States are red, so who knows, we might get a Friday dump. Institutions covering their positions, so who knows, when New York open we might get some volatility. I this time want to zoom in on the more local levels for BTC, because that is where the action is right now. But first we have a very quick glance at where we are right now, a little bit of a broader perspective, just takes a few seconds. If you like this kind of content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think this is useful. Also feel free to follow me on Twitter and Instagram, those links are also in the description. I update you there multiple times a day, and this week it has been an absolute treat if you have been following me on Twitter, because I posted there really a lot. Alright guys, then we are starting off here with the BTC USD pair on the 4 hour. And the reason why I first want to zoom out a little bit is because we have this thick blue line here at the bottom. That's the value area low of this very macro volume node that we are already using for quite a few weeks. And I just want to let you know that I took some profits on this dump yesterday because we had quite the ride already to the downside, not a single pump up. Doesn't mean that we can go lower, but it is of course to be expected to find some kind of support, and that's also exactly what is happening right now on the 4 hourly. You also saw it here that we had a lot of support. Eventually, yes, we broke through and we had quite a swift move up, but it would be stupid not to take any profits on that short, because let's say something comes out for good news, very unexpected, and suddenly the markets could go higher again, and then I will regret it not taking any profits. So I just want to have full transparency. I took profits on the short, but I'm still keeping an eye on maybe an extra dump lower to maybe this support and resistance box that we're using already for weeks now. I can actually also extend it, very clear there for you to see, where we had these touch points, and we already talked about this over and over and over again, because this is just the trading range that we're having right now. Alright, with that being said, then let's start zooming in on smaller time frames. You know what, let's take the 15 minutes. This was kind of what we were looking at yesterday. We had a bit of that triangle, and we were leading bearish into it. I was still in my short. Of course, I was also hoping to go lower. Now that finally happened, and when we were breaking out, then I took some profits here because this was actually a very nice also trading setup if it would have played out to go higher again, because this candle right here, let me zoom in even a little bit further and it's more clear for you. This candle right here on the 15 minute was actually a beautiful swing filled pattern compared to this candle right here. So to then go higher would have made a lot of sense. Actually, yes, it was a bit of a move, but I just took profits and not right away jumped in to a long, but that could have been a approximately 2% trade. Then it was evening in Europe, Asian was asleep, and then you see that the market usually also goes a little bit sideways, and now on Friday, so far also not a lot of action from approximately top to the bottom. This tiny range has been approximately 1%, so a little bit hard to trade if you're looking for a bit of a decent trading setup. I would say that yes, this is a bit of a mini trading range, but we can also just take this whole trading range right here with tops and bottoms, and then it is a little bit better playable, shall we say. Then we're having approximately 4%. That is what we have seen as a trading range multiple times already in the past. If we are going lower, then of course I want to see that 19,500 being taken out. That has been support and resistance a lot of times. You know what, let me actually zoom out just for a second so I can show it to you. Let's do the 4 hourly, because the 19,500 is of course the value area low, where we now have support and resistance a few times, and it was also a tremendous support here, here, and now here again, so it makes a lot of sense that it's support. Now if we are breaking it, like I said, I am looking downwards to this box, and of course the real jam will be underneath the 17,600, the ultimate low that we have put down so far. Alright, let's quickly zoom it back in again. If we are going higher, then I want to see maybe this going up to these highs right here, take them out approximately 20,500, but I also said in yesterday's video, if we are going into 20,400 and higher, I think it's a swift move up from 20,400 here to approximately 21k, because this has been a swift move. There's barely any volume. This has been a swift move and this has been a swift move. In other words, there is not a lot of resistance between these two price levels. And so it is to be expected if we are suddenly start pumping up that this would go higher again, approximately to the 21k. Now my preferred scenario is, although it doesn't really look like it, is that we are going first a little bit higher, thinking everyone that we bounce off again from the value area low, trapping some long, some of the moon boys, a little bit of recovery, and then going lower. That will be really my preferred scenario. And then of course I will play both ways. If that doesn't happen, then of course now the target's to the downside, and that top here at the value area high in the box 23k, I don't think we're gonna see it anytime soon. Quickly head over to the S&P. We stopped yesterday exactly at our box, and I said it already many times before. We get in here, I want to see some consolidation. I am not gonna talk too much about it. You already know where I'm looking out for. Dollar index, this one is a bit more interesting. Now we had this wedge being created, and it looks like now we are breaking out. And we have a successful retest, so this thing looks so far as a textbook breakout. If we then take the measured move, then this would go to approximately 110. The previous high here as well, I mean, don't take me for dollar more or less, but it is here 110.6 and here 110.8. So let's say almost equal highs. That will be the target now then for the dollar index. To be honest, I don't see any reason why we could not make it. Because inflation in Europe just came out, it was more than 9%, again absolutely terrible, and then also equity from Europe will flee into the dollar as a safe haven, just like it does in the United States and other parts of the world. Ethereum then, we have talked about this bearish flag creating yesterday here on the 4 hourly, being created yesterday on the 4 hourly, and that also played out. I also update you in the meantime on Twitter, so if you have seen it, then you know exactly what I was looking out for. Target has been met perfectly, even a little bit further. I said if we are losing the current level where we are trading right now for 1470 ish, then I'm looking out for 1300. That is the golden pocket and a very important support and resistance flip that we already drew out for a long time. Those are always the yellow lines in the chart. If that happens, then we have another drop of approximately 11 to 12%. That will wipe out a lot of people. Interesting. I'm not trading this actively, just want to tell you where I'm looking out for. If we are going higher, then I first of course want to see these highs being recovered here at 1780. Yesterday, I hope you can see it, we talked about the average return in September, and I said, well, actually, if we're just looking at the average return, we still have some room to go to the downside. This is the month of September. Like I said, I hope it's visible on your phone or on your screen where you're looking at. But this is the month of September. In the last 5 years, we had a minus of 7.9, 5.6, 13.6, 7.4, and 7%. So let's say approximately 7% to the downside. We still have 2 weeks to go for the month of September, but if we're just looking at this scheme right here, then it would make a lot of sense that there is more room to the downside. Knowing this and knowing that there is still some room to go, and that we have the Fed meeting next week and they will rise the interest rates on Wednesday, like I said earlier this week, 0.75% is a 100% guarantee. That one is given. The question is, will they rise the interest rates with 1%? I think, depending on what we are going to do today, Monday and Tuesday, that event on itself could be the big trigger for us to finally crash lower, take out that 17,600, and then maybe going higher or crash even much lower. The very, very unfortunate thing is I am in a plane on Wednesday. I don't have any time to look or to trade at a chart. Therefore, there's also no video next Wednesday. But this would be a perfect moment to crash and to maybe even overextend it a little bit, then get higher, and then end the month somewhere here. Because then we have approximately minus 5 or 7%. Yeah, exactly. If we go lower from here to the bottom, that's a 6%. We already have minus 1%, if I'm not mistaken. Yeah, perfect. So that will be then the exact average. But that is of course a bit of a shame that I'm not there. But you know, we need a negative trigger to push the price lower, and that could be then, for example, the Fed rising the interest rates. Therefore, the dollar is rallying up, S&P, Nasdaq, and all the shabam is going down, including Bitcoin, and that will be then the mega drop. Because let's be honest, Also on was it Monday or Tuesday when we had the CPI data coming out, there we had a drop of 9.91% on a day. So it's definitely possible that we're just crashing down again next week with a big fat red candle. If there is one moment next week where it needs to happen, I would say it's Wednesday when the Fed rise the interest rates, and of course that meeting afterwards is super important. Unfortunately, I will not see it for now. Again guys, be careful what you're doing. If you're not in a short right now, I would say please wait until you have a good setup, that this thing maybe first goes higher, a swing fill pattern, or that you have bearish divergences on your indicators, that you maybe see a beautiful M pattern or something before you're entering a short, because like I said, we're already at the value area low, so it is likely there is a chance that we might go a little bit higher from here. But with all the news in hindsight, I would prefer us to go first a little bit higher, then at least we have the fuel to go down again, and then crash on the interest rate hike for next week. That will be my first scenario. On the bottom, I'm doing exactly the same. So now I'm slowly hunting for longs, and then I'm also looking for W patterns, for bullish divergences on the indicators, or for swing filled patterns, and that is actually a little bit now my strategy, and I'm just taking it very slowly, very careful, and it's Friday, so it's always a little bit unclear what can happen. We can have a complete flat day, we can have suddenly some reaction. That will be it for now. I will also be uploading a video tomorrow about where we now are exactly in the bear market. I've done some calculations, some measuring, because a lot of people think like, oh, the bottom is in, the bottom is not in. I am going to show you in a very simple way why I think that A, the bottom is not in, but also how long do we need to wait that we could say, well, this could be approximately the bottom of the bear market, and now we could slowly go up again in the next year or 2 years to come. Interesting video, definitely check that out tomorrow. Thank you guys so much. If you like this, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think this is useful. Feel free to follow me on Twitter and Instagram, as I always say. Those links are also in the descriptions. And see you guys very soon again in the next one. Bye bye.